let's bring on board Sudip Bandyopadhyay to talk more about the markets, what he's making of the trend that's in the making when you talk about sectors. A very good afternoon to you, Sudip. And actually, let me start the conversation asking about the metal space. We just learned that the copper has been on a declining trend globally, and that is bound to have an impact when you talk about the Indian company, not only metal companies, but all of them that use copper as a raw material.
Absolutely right. I think, global metals to a great extent depend on what's happening in China. Unfortunately, there were a lot of expectations being built around the, Chinese Communist Party plenum. And there were expectation of significant stimulus announcement for kind of boosting the economy. Unfortunately, that hasn't happened. And obviously, the market is disappointed. The set of data which came out from China was also not very impressive. And the warehouse stock in different Chinese warehouses of multiple metals, including copper, is significant. Considering the above, I think global commodity prices are coming down, and that does reflect in two ways in India. One, of course, as you rightly said, some of the Indian manufacturers who use copper are rejoicing because copper prices are down. So actually, they are in a better position. But on the other hand, I think strong metal prices indicate strong economy and strong global economy, which does help economies like India, which has significant export potential. So we'll have to wait and watch. But as things stand today, the commodity prices are under pressure, metal prices are under pressure, and we'll have to wait and watch what happens. Again, I will repeat, it will to a great extent depend on what happens in China.
It sure does. For now, though, tracking copper, which is now in a bear market officially, it's 20% off from its May's highs. But for us, Sudip, back to tracking earnings, I guess. Since this earnings season has started, have you put fresh money to work or have you added positions into any of the existing names looking at the earnings?
Well, I think one thing which we have been positive about for some time, Aisha, has been the FMCG space. And we continue to believe that there is a nascent rural recovery, and that gets reflected in multiple pockets. Look at the Colgate numbers which came out. Incidentally, Colgate derives 40% of its sales from rural market, and a rural rejuvenation is helping Colgate definitely. The top line went up, of course, margin and other things also improved, but the fact is top line going up is definitely positive news for rural focused FMCG companies, and we continue to remain positive on that, and that's one area where money can be added. The other area where we have been watching keenly is the BFSI space. The results have been a mixed bag. Some cases there have been significant improvement. In some cases there have been sharp deterioration in asset quality. As far as specifics are concerned, I think, let's say Bandhan Bank, I think it was a laggard. There were a lot of challenges on asset quality. That has turned around. Asset quality has improved significantly, and things are looking up there. And if you compare on a valuation basis, I think they are reasonably valued compared to their peers. So this is one stock where I think one can take a long-term position if they have 1 year plus time horizon.
Markets, because we've fallen significantly from the day's highest point, be it the benchmark indices or even Nifty Bank, 1% off from the day's highest point. For Nifty Bank, Nifty is down over 120 points as we speak. So yes, the markets are giving up all their morning gains, at least for now. Rudra, let me come to you and ask about the pharma sector. Short while ago, we had a mid-cap pharma company, Ajanta Pharma, report its numbers. Sharp spike is what that particular counter has seen. What's your take coming in the pharma space? Should it be the mid-caps versus the large-cap play right now?
Yeah, definitely, yes. When you look at charts of Ajanta's Pharma specifically, yes, it is making that, it has held that support at around 2200 zone, and it has just made a one-way move with higher top and higher bottom formation. And today the close of this stock above levels of 2540 confirms that it has broken out that short-term resistance also, and this stock can further stay up and further continue towards levels of around 2,750 and even eventually 3,000 rupee can come very soon on Ajanta Pharma, and mid-cap pharma can definitely outperform. Keeping in mind stocks like even Biocon for that matter, Granules, these are few stock which is looking very attractive both on chart and even fundamentally this is a sector which can do good. Most of these stocks are breaking out after a 10-year kind of a chart pattern where you are seeing this very long-term breakout, and this can sustain for some more time. Yes, pharma will be a definitely a good sector to be in, and few stock names are Ajanta Pharma, Biocon as well as Granules.
Okay, that's the take coming in on some of the pharma names. Just looking at the market construct right now, by the way, the fall is getting quite steep. If we can just bring up the Nifty Bank as well as the Nifty as well, it's been quite a slide down, completely flattened out from where we started off, or rather the peak of the day. Similar is the case with the Nifty Bank as well. But Sudip, how is it that you're maneuvering within the banking pack? I mean, it was an inline from HDFC Bank, Kotak was a disappointment, and then now you've got IndusInd as well to digest. And on the other hand, you know, some of the smaller ones like an RBL, Bandhan Bank, that's where the positive surprises are coming actually.
Yeah, absolutely right. I think positive surprise was there in PNB as well. I think, this time it's a mixed bag, I would say. Look at ICICI. I think the numbers were pretty good, but there are certain parameters where they were a little weak compared to, past few quarters. So it is a mixed bag. I think there are two things happening. One is, the efficient banks, the banks which were very efficient, their asset quality improvement cycle is over. And we will not probably see further asset quality improvement for these efficient frontline banks. Now, asset quality improvement is coming in banks which were laggard erstwhile. Let's say a PNB, there's an asset quality improvement. There's a Bandhan Bank, there's an asset quality improvement. On the other hand, there is a bad rush for deposits. Now, deposit mobilization, CASA, has become the holy grail for the BFSI industry, particularly the banks. And the loan growth will depend to a great extent on their ability to garner more and more cost-effective deposit. Because if the deposit is not cost-effective, the margin will be under pressure the more and more they do lending. Now, under these circumstances, the focus shifts back to some of the efficient banks which have a large deposit mobilization network. We'll keenly watch HDFC, we'll keenly watch ICICI, and some of the other larger banks with a strong network which is in a position to mobilize deposit in a much better fashion. Some of the PSU banks also will be watched because they also have large network, and we'll have to wait and watch how things pan out. I will be very keenly waiting for SBI results this Saturday, and we'll have to see what kind of improvements or what kind of deterioration we see in asset quality as well as the deposit mobilization efforts.
All right, so that's the take coming in on banks, and take a look at Fine Organics. Just a quick look because it's come out with its numbers. Sharp uptick, 10% uptick actually right now coming in for Fine Organics on back of its numbers. But let's understand what's the buzz in the dealing rooms today. We have Sharad here to tell us all about that. Sharad?
Well, yes, in focus is Aarti Industries, and what we are gathering from dealers and also channel checks is that company's important product, which is the benzene derivative based product, has actually picked up, especially in the domestic consumption part. Now, interestingly, the benzene comes from the discretionary segment of the company, and as per channel checks, this product itself, the domestic volume growth, that has picked up 20% on a month-on-month basis, and also on a value basis as well. Now, overall, the imports are also coming in at a near-time all-time lows for these benzene-based products, and this is because of a recent hike coming in for the clearing freight and forward charges coming in from China. And what the industry is stating is this has gone up between 20 to 30%, and that is why the domestic demand for this benzene products has picked up for Aarti Industries. Now, as per analysts also, Q1 numbers are expected to be strong, especially because of the higher volumes expected in the discretionary segment, and also on a year-on-year basis, an EBITDA jump is expected because of operational efficiencies.
Well, lots of earnings as well, and Tata Steel is also due to report its numbers tomorrow. Let me take it across to Ashesha, find out what the street is penciling in.
Well, yes, we are expecting muted set of numbers from Tata Steel this time around. Lower consolidated volumes are expected to impact numbers, but EBITDA per ton loss for European operations is expected to narrow on a sequential basis, and that will be a positive this time. As far as numbers are concerned, consolidated revenues are expected to largely remain steady on a sequential basis, but margins could contract to 10.8% versus 11.2% that the company had reported in the previous quarter. As I mentioned, consolidated volumes will be on the lower side on a sequential basis, and this will be mainly on account of India operations, especially after a seasonally strong Q4 that the company had reported. As far as India operations are concerned, EBITDA per ton is expected to decline by about 8% on a quarter-on-quarter basis. Steel prices were largely steady, and coking coal prices were on a declining trend, which will partially offset the impact of lower volumes in the quarter gone by. As far as European operations are concerned, spreads are expected to narrow, so the company had reported losses of about $39 per ton in the previous quarter, which will narrow to $30 per ton in the first quarter. Commentary on capex on expansion plans and especially commentary on European operations and UK transition will be crucial. But all in all, muted set of numbers expected from Tata Steel this time.
Hang in there, Shesha. Apart from Tata Steel, you also have Coal India that will be reporting their numbers. What should one expect?
Well, yes, we are expecting muted set from Coal India this time around. Lower volumes and lower e-auction premiums are expected to impact numbers on a sequential basis. Consolidated revenue for Coal India could come in at about 35,750 odd crores, which will be a decline of 4% sequentially. Margins, meanwhile, could come in at 27.5% versus 30.3% that the company had reported in the previous quarter. As I mentioned, lower volumes and lower e-auction premiums are expected to impact numbers. Lower e-auction premiums were at about 66% in the previous quarter, which are expected to decline to 60% in the first quarter of FY25. Meanwhile, share of e-auction volumes is expected to rise from 11% in the previous quarter to 13% in the current quarter. Management commentary with respect to guidance for the full year, guidance on e-auction prices, e-auction premiums and e-auction volumes will be crucial. But all in all, muted set of numbers expected. Lower volumes and lower e-auction premiums are expected to impact numbers.
Right, and that's not it. We've got Srishti as well waiting by to tell us what to anticipate from Maruti as well as M&M. Srishti?
Well, certainly. Firstly, let's have a look at Maruti Suzuki. This time we are expecting a decent set of numbers. The margins can also see an improvement, but that will be on a YY basis. 12% is what we are expecting. As well as if you look at the volumes, though there has been a jump of 5% on a YY basis, there has been a 11% decline on a quarter-on-quarter basis. So we can actually assume similar kind of an impact on the revenue if we compare it on a sequential as well as on a YY basis. The revenues is expected at 34,770 crores. EBITDA estimate is at around 4,160 crores, and indeed the margin is key to watch out for. 12% is what we are expecting. And lastly, on the bottom line, 3,467 crores is our expectation. But indeed, apart from the numbers, we'll be watching out for the management commentary on the demand and the volume outlook, because a couple of concerns that in the second half there could be some slowdown because on the passenger vehicle sales, how the inventory is lined up right now, and most importantly, after the tax waiver in the state of UP, how the sales of Maruti Suzuki for their hybrids have inched up. We'll be watching out for that. And quickly, let's have a look at M&M as well. This time we are expecting a good set because the mix is quite supportive. The auto volumes have inched up 14%, tractor volumes also up around 6%. And the revenue is expected to see a jump of 17% on a YY basis. The margins also expected to see an improvement, and close to 14% is what we are expecting. That will be on the back of operating leverage, as well as finally the tractors have seen a good momentum. Profit figure is expected at 6,445 crores. But on the management commentary, the 15th August launch of the new Thar is something. More commentaries on that. We'll be watching out for that. So all excitement for these two auto majors. Back to you.
Absolutely, going to be a very busy day tomorrow, Srishti, indeed, given the fact that you will be busy with the auto numbers as well as Tata Steel as well as Coal India. So a lot of numbers to watch out for tomorrow. But for now, taking a look at the markets, definitely looks like we are ending near the day's lowest point. And Kunal, so what are your BTST ideas for our viewers?
So there'll be a couple of buy calls. The first one is around Chambal Fertilizer. That's a chart which is looking attractive. In fact, many of the fertilizer names have started to pick up pace for themselves. So Chambal Fertilizer is what I would pick at current levels, targets of 535, stop loss to be kept at 505. And Adani Ports is the other stock which is heading towards a momentum breakout above 1550 plus mark. So would suggest a buy above 1550 levels, targets of 1625, stop loss at 1500.
Rudra, what about you? What are your BTST ideas?
So I too also have a 2 buy call. One is on Coal India. Stock has given a breakout above levels of 502 and it is sustaining for last 2 days. So expecting Coal India to touch 530 with a stop loss of 514 and a buy call on Adani Enterprises. One can look at targets of 3,200 to come with a stop loss of 3,130.
Okay, India Mart numbers as well up for you on your screens, and operationally they look quite okay. It's an uptick of 37% that they've seen on the PAT alone, 93 crores on the EBITDA, and you can see that spike up coming on the entire space. But Sudip, other than the pockets that we've already spoken about, anything that's on your watch list?
I think the infrastructure, construction, and related sector continues to get significant attention of the government and multiple other authorities. Private sector is also hopefully getting into the capex mode, and under the circumstances, these are the sectors which will continue to attract a lot of fresh orders and opportunities. Some of the companies in this space are still reasonably valued, I would say relatively, and somebody in this investment for long term should reap benefits. I will talk about a specific company, Patel Engineering. I think they are predominantly into hydro tunneling and irrigation related water projects. And this is one space which has a significant focus of the government and multiple other authorities. Under the circumstances, their order book is significantly moving up and execution is improving. So I think some of these spaces where the valuation still remains reasonable can be definitely looked at. Some of the larger construction infrastructure capex plays like Larsen, in spite of the run-up, continues to remain attractive from a long-term perspective.
Okay, Sudip, Rudra, Kunal, thank all of you for taking the time out and joining us today.
If you like this video, then like, share and subscribe to ET Now.